ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, shake that. Raise your hands up, raise them up.
Hi everyone, and happy Thursday. It's just ticked over 11 o'clock in the morning, GMT +8 time, and it is the 3rd of March already, 2022. And in today's episode, definitely, again, a lot to talk about. There's actually a lot of news events that have been going on in the week, which have really been, shadowed by what we are still seeing with the Ukraine developments. And obviously a lot going on in commodity prices as well. That has been really the focus on traders as well. We've seen a lot of big prices, a lot of big price movements higher in oil as well, and also iron ore too. So it's been very interesting to monitor everything that's been going on. But we do have the yen and gold in focus today with Jin. I'll be going through the DXY, and I'll also be touching upon a couple of trade ideas as well in the Australian equity markets. And Gimme will be going through the Jerome Powell testimony from last night as well, and just summarizing that. And definitely a lot to look forward to as well with the NFP coming up on Friday night as well. So Gimme will touch upon that too. So before we get into everything that is happening today, I'll just go through the risk disclaimer and also read this out. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. And we are here to help for the LCMS Trading Club members that are catching the call live. If you want to leave a question in the chat or within the trading floor chat room or the specific room that you're looking to get your questions answered for. So thanks for joining us. And now Gimme to share his insights into Jerome Powell's testimony and NFP coming up.
All right. Thank you, Scott. Okay, Jerome Powell's testimony. So this is the speech statement, okay, that was released, I think, hours before the testimony, okay, and there are actually several points that I would like to highlight, okay. First of all, it's actually pertaining to the Russian-Ukraine war, okay. We really love to know what the chairman of Federal Reserve think about, the impact of the war on the US economy, and of course the monetary policy decisions to be carried out. All right, so the first part is over here. Okay, so the near-term effects of the US economy of the invasion of Ukraine, the ongoing war, the sanctions, and of events to come remain highly uncertain. Okay, so I think this is pretty much I would say expected. I was actually expecting the central banker to actually say something like that. Okay, it's actually very similar to what the Bank of Canada and the Reserve Bank of Australia have highlighted in their respective interest rate statements. Okay, so obviously this is going to have an impact on on pretty much everything. Okay, I would say maybe not specifically not directly on the employment market, okay, but indirectly, things will actually have chain effects, right? It will all be linked up, and eventually there may actually be an impact after all, okay, on the US jobs market. So as highlighted by Powell, is going to have an impact on the US economy, and it's likely going to remain highly uncertain for the time being. Okay, so I mean, with this, why do I highlight this whole, the importance of the impact of the war on the US economy is because we will want to know if the Federal Reserve will actually, have a change in mind, okay, on the expected US interest rate hike in March during this month's meeting. Okay, so this part will be over here with, okay, So over here, right, our monetary policy has been adapting to the evolving economic environment and will continue to do so. We have phased out our net asset purchases, okay, which is good, right? QE has ended. They will no longer be purchasing any more bonds. And in addition, with inflation well above 2% and a strong labor market, we expect it to be appropriate to raise the target range for the federal funds rate at our meeting later this month. Okay, so this line over here simply tells us that the Federal Reserve will be increasing interest rate during the meeting this month. Okay, so the question next to be asked is, will it be a 0.25% rate hike, or will it be a 0.5% rate hike? Okay, so prior to this whole Russian invasion of Ukraine, okay, we are all very optimistic. Okay, we are all very certain that a rate hike will take place. Okay, and we were actually very optimistic that the central bank may actually carry out a 0.5% rate hike. Okay, because inflation is rising, is running hot, and it's at its like 4-decade high levels already. Okay, so the market is actually hoping, okay, with I would say a decent amount of probability, okay, that the Federal Reserve will be increasing interest rate by 0.5% instead of a 0.25. Okay, however, all right, with this political tension coming in, okay, I would say it is less likely, okay, that the Federal Reserve will be carrying out a 0.5% rate hike. All right. So I think, let me look for the part. Okay. So this part over here, two. Okay, it's not highlighted in the statement, okay, but it was actually sounded out during the testimony itself, okay, when the committee members of the House of Representatives actually questioned Jerome Powell on monetary policy, okay, and what he actually mentioned is this, I quote, okay, the central bank is prepared to move more aggressively by raising the federal funds rate by more than 25 basis points. Okay, in a scenario whereby inflation will continue being so strong. Okay, so I think with the certainty that interest rate will be hiked this time around in March, okay, and with this second statement that I've just quoted, okay, it kind of confirms, well, I wouldn't say confirm, but it kind of gives the market the impression that only 0.25% will be hiked. Okay, only 0.25% of interest rates will be hiked during this month's meeting. Okay, and any more than 0.25, okay, will really have to depend on how inflation goes. Okay, if this whole political tension were not to happen, then yeah, I think it's fair game to expect a 0.5. But then with this current situation going on, and Jerome Powell has already said that it's creating a lot of uncertainty, and it remains highly uncertain. Okay, I think the central bank itself will actually take a more, I would say, careful approach. Okay, a more prudent approach in terms of rate hike. I mean, after all, it is still there's still like 6 more meetings. Okay, after the March 1, okay, there'll be 6 more meetings to be held. Okay, and the central bank can always raise interest rate more aggressively, okay, once this whole political tension is over, or becomes more optimistic. And then if inflation were to continue being so stubbornly high, stubbornly strong, okay, then of course they can always carry out a 0.5% in the later meetings. All right, so for now, yeah, I would say, unfortunately, maybe, okay, we can only expect a 0.25% interest rate hike coming from the central bank. Okay, so there is a bit of a hope, I would say, okay, but I personally don't think this is likely. Okay, and that hope is this: the next inflation data will be released on 10th of March, okay, 7 days from today, all right? And the Federal Reserve meeting for March will be held on 17th, okay? So 7 days before the Fed's meeting, we have the inflation report. Okay, now the reason why I say there's still a slim chance, okay, a bit of hope, is that if this inflation report released on the 10th, okay, were to show even more, even hotter inflation, okay, for the month of February, okay, on an annual basis, okay, for the month of February, then that may actually, I would say, push the Federal Reserve to actually carry out a 0.5% rate hike. Okay, so it really depends on this inflation data to be released on the 10th of March. Okay, and the data has to be really strong. Okay, personally, I feel that the Fed is adopting I would say a very conservative approach for the time being already. Okay, so even if the inflation data were to inch up by a little, okay, unlikely the central bank will carry out a 0.5%. Okay, however, if the inflation data shows that it turns out to be way higher than it's not just some like 0.1 or 0.2, even a 0.4 kind of an inch upwards kind of a data. Okay, if let's say it's going to be like a 1% increase, okay, 1% higher than the previous data released, like 8.0 on an annual basis for headline inflation, then that may very well put the Federal Reserve in a spot, okay, and may actually pressure them more to actually carry out a 0.5% rate hike instead of a 0.25%. Okay, so I would say the inflation report to be released on the 10th of March will be very crucial, will be something that the market and the central bank themselves, okay, central bankers themselves will be paying attention to, okay, and just 7 days before the next meeting on the 17th. Okay, so that's all we have right now. Okay, that's all we know as of the Jerome Powell's testimony in front of the House of Representatives. Okay, tonight at the same timing, okay, 2300 GMT plus 8, Jerome Powell will be testifying again. Okay, with the same statement that you're looking at right now. Okay, in front of the Senate. Okay, and I don't think there's going to be anything new, but okay, anything is possible depending on what kind of questions the committee members of the Senate will be asking. Okay, although I think it's unlikely, okay, but I'm hoping the members of the Senate, can ask more. I would say, can ask questions that can push Jerome Powell to say more about about monetary policy in terms of specifically interest rate hike. Okay, although at the moment I think it's not going to be an easy task for the Senate committee members to actually ask Jerome Powell for more details. Okay, but otherwise, personally, I'm expecting little to no impact coming. Okay, little to no impact on the US dollar. Okay, coming in from tonight's testimony. Day 2's testimony. All right. So that is for the Jerome Powell's testimony. Any questions on this event? Okay. If there's nothing, all right, let us head over to the economic calendar. Okay. As you guys know, tomorrow is the first Friday of a new month, okay? And when it's the first Friday of a new month, normally, okay, most of the time, we will be hearing from the US Bureau of Labor Statistics in terms of employment figures, okay? So this time around, okay, for the month of February, okay, 407,000 jobs are being expected to be added into the economy, okay, as opposed to the January's figure of 467,000, okay. Figure-wise, I would say it's not too big of a change, okay. There's some 50,000 lesser than January, okay, fine. But personally, I don't think that this report is going to cause too big of a price movements in the US dollar. Why is that the case? Okay, now, as you guys know that, for the past few reports, okay, past, I would say, well, more like the, last year's jobs report, okay, I have been emphasizing that they are pretty much the limelight, okay, because they will determine if the Federal Reserve will be carrying out a faster tapering rate, or and okay, a more aggressive rate hike in 2022. Okay, and we pretty much already get our get the information that we are looking for. Okay, QE has ended. Okay, in March right now. Interest rates hike can be expected in March. Okay, and it's more or less towards the 0.25% hike rather than a 0.5% hike. Okay, although it also depends on the inflation report to be released 7 days down the road. Okay, but the thing is, the key point is basically we have already receive clarity, certainty, from the Federal Reserve itself, in terms of monetary policy tightening. All right. So right now, I would say this report, if the data were to turn out to be as expected or somewhere around the expected figure of 407,000, 7,000 jobs. Then I think it's going to be little impact on the US dollar. There's going to be little movements in the US dollar. Although to be honest, if there's any, I would say, way stronger figure, way higher figure, like a 600,000. If we were to see something like a 600,000 jobs being added for the month of February, now that will definitely create a surprise. That will definitely create a surprise to the currency market. And that is when we may actually be seeing a strengthening in the US dollar. Because look, if the data were to turn out as 407 or somewhere around 407,000, it's as expected. And then, because of the whole geopolitical uncertainty that's ongoing, the Federal Reserve may want to take things one step at a time. However, if the data release, were to turn out to be like some 600,000, way higher, that will definitely put more pressure on the Federal Reserve, in terms of carrying out more aggressive rate hikes, like the 0.5%. Then together, with this report, together with the inflation report, depending on how it turns out to be, if the inflation data turn out to be, maybe for example, 8% on an annual basis, then these two reports, these two superb report, will definitely put a lot of pressure on the Federal Reserve in terms of carrying out a more aggressive rate hike. Now, then we will be, there will be a lot of, I would say, actions going on. We will be seeing a lot of movements in the US dollar. But if the data turns out to be 407 or maybe even lower, anything falling short of 407,000, maybe for example, only 300,000 jobs will be added in February, or maybe 200 or even lower, that will definitely dampen the mood a bit, that will definitely be in favor of the Fed carrying out a more conservative rate hike, aka 0.25%, but of course, if you guys want to trade this news, of course, we will have to hope that the employment figure turns out to be way higher than 407,000, because that's probably the only chance we will see fireworks in the during the data release tomorrow, at 21:30 GMT plus 8. All right, so I don't think the likelihood is high that we're going to see a 600 or 700,000 kind of data, kind of a figure, although if we were to look at the previous month's data, let me see if I get it, although we can see that it's pretty much, I would say, like for January's figure, it was like 467,000, and then anything prior to that was like some 200-ish thousands, and then the last time you actually hit like 600,000 was last July, 2021 July, where you actually hit 943,000, and then the next highest one would be for the month of October 2021, whereby 531,000 jobs will be added. So at the moment, I would say, with this whole stagnation, slowing down of job creation, it is unlikely that we are going to see 600, 700 kind of thousand kind of a figure coming back for now. So nonetheless, if it really turns out to be 600 or 700,000, that would definitely be a big surprise, and we can expect price movements. All right, unemployment rate is expected to inch down lower, okay, which is a good thing, okay. But like I've said, there is a a level whereby whereby unemployment rate will have to stagnate, and it's pretty much this period of time. Okay, so from 4.0 to 3.9, if it turns out to be 3.9 or 3.8, I wouldn't expect a big price movement coming in terms of unemployment rate. Okay, and then average hourly earnings is expected to slow down slightly, but still at a good healthy level, I would say. Okay, 0.5% increase in wage is being expected for the month of February. All right, so apart from these three economic these three data, okay, from the employment report, okay, I would still like to urge you guys to pay attention to the participation rate, okay, because that data will tell us, a rise in participation rate, okay, will tell us that, more people are actually returning back to the labor force, okay, in the US, which is something that which is something that everyone would love to look at, okay, would love to have, okay, especially the Federal Reserve, okay, that will tell us that will indicate the health of the employment market, jobs market in the US, okay. So still pay attention to that. I'll be around in the Traders Club to actually, I will definitely be waiting for the data release, okay, and then I'll break it down to you guys, all right. Of course, if we don't see a super high figure from the non-farm employment change data, then yeah, I would say the move may not be as strong as we would want to see, okay, in order for trading opportunities to, for short-term trading opportunities to be around, okay. So we'll see how it goes, all right, and then I'll break it down to you guys during the club, okay. So any questions on the non-farm payroll data? Anything below a surprise number of 600,000 will be bearish USD. I wouldn't say, okay, it depends, all right? So anything below 407, okay, the forecasted 407,000 figure will likely be a bearish, will likely lead to a bearish USD, okay? But if there's anything between like 407 to 600, okay, I would say it's very uncertain, okay, in terms of price movement, okay, because the expectation is 407,000, okay. Anything between 407 and 600 would be between the realm of expectation, and okay, it's stronger than expected, yes, but it's not as impressive, okay, as I would say it's not an impressive figure to actually create a higher sense of urgency for the Federal Reserve to carry out a aggressive interest rate hike, like a 0.5%, okay? But anything above 600, okay, will definitely, be like, come on, Fed. Yes, we know that there's this ongoing political tension, but look, employment is still rising, and hopefully inflation, okay, 7 days later will be much higher than expected, okay? Now, with these two strong report coming in, then we will see a strong pressure on the Federal Reserve in terms of carrying out a more aggressive rate hike, okay? But below 600, but above 407, I would say it may actually be, it really depends on what the market sentiment thinks about it, okay? But a below 407,000 figure will likely cause a temporary short-term weakening in the US dollar. So what you are saying is that 400, 600 is already priced in by the market. I would say yes. I would say, okay, 407 is an expectation. It has been priced in, okay? But we cannot base off one single figure, right? There must be a range, okay? So my range of 407 to 600 has been priced in, is the one that I'm anticipating, okay? But anything above 600 is something that is unexpected, okay? Unexpected, or, it's not, the market's not looking forward towards a higher than 600 kind of figure. Hence, if that were to happen, then we will likely see a strengthening in the US dollar, okay? But anything below 407, yeah, I would say that will be the, where's the 600 coming from? Oh, it's just my personal, my personal figure that I project. Okay, you can call it like a crystal ball kind of thing, okay? But if we were to look at the previous data over here, okay, this is how I actually came up with the 600 figure, all right? For the past Okay, like I've said just now, when was the last time we actually see something higher than a 600? Okay, it was during this over here. Okay, let me just erase all these figures. Okay, and this 943,000 figure being released on August 2021 is actually for July 2021. Okay, so that was the last time we actually see a very strong, close to 1 million jobs figure. Okay, close to 1 million jobs being added into the US economy. Ever since then, okay, ever since then, let me just see if I can shift this further. Is this the one? 1 million? Nope, not this. This is the one. Okay, maybe I shouldn't. Okay, now, ever since wait, why did it? Oh, because it's 2020. Okay, let me get this. Okay. So ever since this July's figure of 943,000 jobs being added, okay, being released, we see there has been a decline. Okay, there's been a strong slowdown in the number of jobs being created in the US economy. Okay, in August it's 235, in September it's 194, and then there's a shoot up in October, 531. Okay, and then coming back now again. Obviously, it's not reliable. I mean the data is, not say the data, but the strong jobs growth is not reliable. And then it come back down to 210 in November, and then in December it's stagnate around 199, and then in January, okay, it actually went up again to 467,000. So you can see that for the past 1, 2, 3, 4, 5, 6 months, okay, on average, I would say the data, number of jobs being created in the US economy averages to around 300 to 400,000. Okay, so if you were to tell me that this time around 407,000 jobs is expected to be expected to be added into the US economy in February, then I would say that's pretty much it's around I would say the average. Okay, and so it's not a surprise that the market is actually expecting something like that. All right, but anything above 600, okay, would be the highest. Okay, likely. Okay, if it turns out to be like higher than 600 or 600, okay, maybe, then we are likely going to see headlines like US economy added 600,000 jobs into jobs market. The highest in 6 months. Okay, as you can see over here, in the past 6 months, it's been lower than 600,000. Okay, so that's how I come up with this 600,000 mark. Okay, of course, it's not exactly. I can't be exact. You can't be exact at 600 or 601,000 mark kind of thing. Okay, but it's like a range, right? So anything between 407 to 600 would be an expected, like what Sunil puts it, priced in. Okay, anything above 600 will be a pleasant surprise, okay, for the US dollar. Hence, we can actually expect the US dollar to strengthen, okay, because that will put more pressure on the Federal Reserve to come up with more aggressive rate hikes, probably as soon as the March meeting. Okay, anything below 407, okay, I wouldn't say 407 exact, but maybe anything below 300,000, okay, anything below 300,000 would really be will really dampens the mood. Okay, will really likely cause a weakening in the US dollar for the time being. Okay, but keep in mind, all this impact on the US dollar, okay, is likely going to be short term. Okay, because still, what supersedes all these economic data for the time being is still the developments of the Russia-Ukraine war. Okay, US dollar being the reserve currency will definitely have a reaction towards the developments of the war. Okay, if let's say, I think I just read yesterday or earlier today that the next meeting may be as soon as this week. Okay, maybe tomorrow. Okay, if let's say tomorrow there's a meeting going on and they say that the cessation of the war has been discussed and is actually being taken up. Okay, let's say there's a temporary short-term stop of the war. Okay, then that will definitely likely lead to a risk-on sentiment. Okay, hence we may actually be seeing the US dollar weaken against the other risky currencies or even gold. Okay, so even if we were to see a 600, 700,000, 800,000 jobs figure coming from the BLS, okay, that potential strengthening of the US dollar may actually be muted. okay, by this whole developments of the geopolitical tension. Okay, so it all depends on how really it all depends on how the developments on the war turns out to be. Okay, but at that time of release of the non-farm payroll data, okay, there will still be trading opportunities if the 800 figure were to turn out to be true. 600 to 800 figure would turn out to be true, okay, or maybe the less than 300,000 figure causing a weakness in the US dollar. Okay, so if you guys want to trade this news, really trade and just close your trades before the end of the weekend, before the end of the week, okay, because it's Friday and you don't want to be caught in any new developments being announced on Saturday, on Sunday when the market is not moving, and then eventually seeing a strong gap up or gap down like what we've seen early on this week when the market opens on Monday. Okay, so any more questions on non-farm payroll? I kind of like these questions, like the range, like the range that figures may turn out to be, okay, in order for price to move up or move down and things like that. Okay, so I mean, if you guys have any more questions like these, just put it in the Traders Club. Okay, and if you guys can come up with any, all right. Anyway, from now until the non-farm payroll, there's still like 1.5 days to go. Okay, so if there's no questions for now, I will hand it over to Scott for his analysis on DXY. Over to you, Scotty.
All right, thanks, Kimmy. And just getting straight into it. So DXY, it's still pushing higher as well. So we did see that pullback on yesterday's daily candle and how it closed. But we are seeing currently on the hourly now that we are making a push for recent highs as well. So I've got 98.23, hasn't been visited in some time actually. And the recent highs at 97.77 or just below that is looking to be the next area of resistance that we have encountered. So something to really look out for. Obviously, Gimme went into detail about the primary catalyst, which is going to be that NFP figure, but it has proven to be tricky playing the news announcement itself. So we might see some moves before the release, even earlier on Friday morning in the Asian session. We could, have a setup there potentially where we do make a move high, but the upside is a little limited because we're going to have to see something really dramatic. And with that fact that the NFP has been coming in a little weaker, it's going to be, anything can happen, but if we do see the job push over 600, that could be a real strong catalyst for the US dollar. But at the same time, taking the move before everything actually is released has proven to be advantageous as well. So I really prefer to see it just sort of trickle down closer to 97 or even maybe 97.20 or a little bit lower before sort of taking a trade. Just with the upside being so limited, I prefer to take it on a dip long than to actually play a breakout, because we're going to have to see something really dramatic to see that US dollar strength continue. Now, I quickly want to just go through the news as well. So Gim did discuss what Fed Chair Powell was mentioning in his testimony as well. And we did have some upcoming news as well. So for tonight, we've got more Jerome Powell testimony as well. The ISM Services PMI is coming out as well, but very much I'm expecting things to sort of be floating around here. So 97.50 and maybe small pullbacks, but ideally overnight, later on into that period where the US finishes and Asia starts, if we could get a little dip lower to 97.20, 97.10, that would be better. And then for the rest of Friday, we might see a lift as the market anticipates NFP. So that could be the play there on the DXY, because we've seen it been challenging with different figures coming out that are conflicting on unemployment and NFP missing, but unemployment comes in lower than expected and the market doesn't really know what to do with it all. So that's another thing that I would mention as well. So, and again, just something to pay attention to, guys. We are seeing the Brent crude price as well. That is moving up and pullbacks are being bought into as well. So this is the 1 hourly. We saw overnight that we did see the pullback, but the rally continues with no clear messaging from Ukraine or Russia about the negotiations having any sort of success yet. So I would sit back and wait really the weekend and then see what happens on Monday. We are seeing a little bit more intensive battling as well, with Russia sort of stepping up their artillery assault on Ukraine. So just be cautious with making any plays, especially even over the weekend if you are thinking of a swing trade. So be cautious there with playing the risk sentiment, because it is still really flipping, and we see the S&P 500, that's still not too bad really. But I'm more sort of short-term focused. Really, this rally, it's hard to sort of want to jump on for a medium-term trade, just given everything that's happening. So I guess we'll have to wait and see what happens with NFP, guys, but make sure you do hang around in the chat if you've got any questions. But we do have yen now in focus with Jin, and gold too. So I'll hand it over to you now, Jin.
Oops, press the wrong button there. Thanks for that, Scotty. So a lot of information shared about, what Powell has been talking about, the non-farm payrolls, how the dollar index has been moving, everything overshadowed with the uncertainty and the conflict in the Russian-Ukraine borders. What this means is, looking at the US yen and the yen pairs in general, is that the whole idea of a reserve, or the move towards reserve or move towards safety, comes back into play. Not a lot of data to be released, or to consider that the data is not going to have that much of a medium-term impact. Bear in mind that, with the release of data, there might still be that quick fluctuations, but then we're likely to see that for very short term before it goes back into the whole unknown and the uncertainty with the conflict. So what this means is, looking at the news here, well, we've gone through all the news, so I wouldn't look at the news here. Looking at the US yen on the H4 time frame, right now sitting at this 115.64 level. Idea is that with the dollar looking like it's gaining some strength, we could see it track higher towards that 116.23 level. But I think that the key level at this point will be 115.75. The last time it came to this 26th of Feb, turned straight back down. A couple more times here on the 16th of Feb, it turned straight back down as well. I think that if we can see it clear, this 115.75 level, then we're going to see that move towards 116.23. In terms of a trade idea, I think that there are two ways to look at the US yen at this point. Is that if you're going to follow the trend, you could be looking for it to break above that point, look for a tight stop loss about 20 pips, a take profit about 40, a 1:2 towards the upside for the US yen on H4. That's following the recent trend, following that recent move towards the upside. If it breaks that resistance, we can see it move towards that 116.23. Alternatively, the other thought is to wait for it to react to this resistance level, and if it rejects, if it turns back down from this point, then you can look for that selling opportunity, right? You can look to sell down from this point. I would say look to sell below 115.60. Again, about a 20 pip stop loss, about a almost 50 to 60 pips take profit level, a 1:2.5, almost 1:3 risk reward ratio towards the downside for the US yen on the H4 time frame. So it's approaching that resistance level where a reaction either to the upside or the downside will give you that trading opportunity. With the unknown in this, or the uncertainty with the conflict at this point, stay a little bit more flexible, have that opportunity to either trade it towards the upside or the downside for the US yen. With that said, looking at the euro yen, now, it's found quite I'll zoom in a bit more here. Right, it's found quite a good base at this 128 level. It's found quite a good support level at 128. I think that looking to trade it down further, like what we did the last time round, could be possible, but not very attractive at this point, because either to the downside, you might have a similar trade idea. If I move that across, you could be looking at a 30-40 pip stop loss, about 100 pip take profit, 1:3 risk reward ratio towards the downside. But we can see that the downside, despite the support level there, might be a bit limited. And also with the anticipation that the US yen could move higher, we could see it bounce off this support level back up towards the upside. I would say that on this case, for the euro yen on the H4 time frame, I would stay away. I wouldn't look to jump into any trades on the euro yen at this point. Probably pay a bit more attention to the euro dollar or the US yen rather than the euro yen. But in the next case, for the pound yen at this point of 154.85, I think that recent move that bounced off this 153, we could see that move up towards 155.90. We could see it bounce off this point. As you can see that the last time it reacted off this support level, we saw it track very nicely up towards 155.90 and even up towards 158. I think the immediate target at this point, if you're looking at a short-term trade, could be to look to buy above 155. If it breaks above 155, a tight stop loss about 40 pips, a take profit at about almost 80. You're looking at almost 1:2 risk reward ratio towards the upside for the pound yen. So look to buy above 155, about a 40 pip stop loss, about an 80 pip take profit level, a 1:2 risk reward ratio towards the upside, towards that 155.90 resistance level. So, US yen, both the upside and downside potential as a trade idea. Euro yen, probably stay away. Pound yen, I like it because it's bounced off. It seems to have reacted quite nicely off this 153 support level, trying to see whether it will track up towards 155.90. And then lucky last, we have gold. Gold, the last time we spoke about it, at the start of that conflict, we were saying that it could track all the way towards 1990. What we've seen is that quick jump up, that quick spike up on gold, and then that retracement again back down to that support level of 1878. At this point right now, I think that we're probably going to see it settle down a little bit more. That conflict, or even some talks about a possible ceasefire, as the guys were discussing just then, we might see gold maybe track down a bit again. At this point, at 1928, I think it would track down possibly even towards 1900 before that move upwards again. So I think to temper this down, I don't think it will track all the way that much. I think that we're going to see it react towards 1900, back towards the recent high of 1960. Buying opportunities will be to wait at this point, wait for it to track down towards 1900 or even about 1915 before looking for buying opportunities back up towards the 1960 resistance level again. With that, back to you, Spuddy.
All right, thanks for that, Jin. And just remember, guys, if you are catching this a little bit later or you want to review it, we do share it. So please feel free to watch it again and share any questions or any queries that you've got about the trade ideas or anything mentioned in the call. Thanks for joining us today, everyone, and hope to see everyone tomorrow for the CAD, oil, and cryptocurrency for the end of the week for Friday. Bye for now, everyone. Have a great rest of your day.